Good afternoon. Wanted to do a quick daily trade recap for everyone. Just in case you're curious on credit spreads that we run on SPX every day, the success rate, kind of the methodologies behind them and everything. So we saw a quick drop this morning from market open. We know that we've had some pretty heavy resistance around kind of this 50, 60 to 50 50 area for the last 3 days, especially. We've had lots of support here, support slash resistance, depending on the market. This was support, and then it cracked through 2 days ago and it's kind of become like the chop zone resistance. Lots of demand. So when we were running up today, we had a big drop and we started to run up, and it looked like it was just going to be a slow grinding algo type day where we just go up and up and up. But we did start to see a little bit of rejection. We peaked up here almost to the 50-50 level, and I saw this drop. And immediately I was like, all right, let's look at call credit spreads. That was kind of the overall trend of the market, obviously, as we know, has been lower highs and lower lows. So we're in a downtrend right now. And it seemed like it's been going like that for the last, I don't know, the last week and a half now. It's been a little bit different from what we've been used to. It's been for the last 3 months, we've been buying the dip every morning. And all of a sudden we are now no longer buying the dip, and we are just playing the market as we should. So we kind of saw here, this was our peak 52.64, big gap down, gap filled, but we didn't make new higher highs. And now we make a new lower low, higher low, and we just keep trending down. Like this is how it works. Escalator up, elevator down. We slow grind up. I mean, some of these moves aren't that slow when you have a massive gap. I think this gap is going to fill in the next day or two, but when you have a massive gap up and go, this was a big day back FOMC in February, I believe. But anyways, going to a more zoomed in view here of the day. So we start seeing that, we're getting some rejection here up towards this level of resistance. So we entered here at 8:43, I believe, is when I got filled. So I posted the trade here 8:38 this morning, Mountain Standard Time, to enter in your orders for the 50/90, 50/95 call credit spread. And so that was 8:38, and then we got filled. If I go back here, we got filled at 8:43. So 5 minutes later, we got filled, and that was on this pop right here, this pop back up. So we popped up, we were around 30 cents, dropped down to 20 cents, and popped right back up to 30 cents, got filled. And it ran up to a high of 45 cents on the day. So we were starting to get a little bit, people were starting to get a little nervous when we were pushing even higher. Trend line hasn't broke. We're just going up to this level. Some people were thinking we might pop out above it, but we got a massive rejection from this key level, and then we sold off the rest of the day and chopped around, which is really nice for a call credit spread. So for those of you who aren't super familiar with the call credit spread, the goal here is to sell a call credit spread so that you are collecting credit on the trade. The goal here is for theta to work in your favor and for price action to either work in the opposite direction or stay flat. And we do these types of trades every day. This is actually the only trade that I trade anymore is call credit spreads. I have another portfolio that's just long positions. That's obviously good for the long term, but for the day to day, I take these trades. They're really high profitability and high probability. Obviously, you have to manage your risk accordingly. And so we had some zones set up here. If we were going to pop up above 50-60 was my first warning trigger, and if we popped up above about 50-66, then I was going to start looking at an exit for a loss. But we do have like a 90+% win rate, and so it doesn't happen super often. but most of the losses do come when we try to play, and we usually don't, but when we try to play anything in the afternoon, that's when it usually gets a little bit more dicey because you're playing a little closer to the money and things like that. So yeah, we played this trade today. We got out about an hour and 20 minutes later, 10:04 a.m. we got out, and then I'm currently getting crushed a little bit on on a Netflix call debit spread. I risked $130 to make $120. Probably lose it all. That's fine. That's why I play. I don't play earnings, but Netflix has popped most of its earnings, so I thought I'd just give it a go. But doesn't look like we're going to get up above 612.5 is what I was hoping that we'd get above, so I could collect full credit by the end of the day tomorrow. So that's the trade. I mean, the methodology here is pretty simple. We take these 0-day spreads. They expire at the end of the day. We collect the credit. We get in. We get out. We get out at 50% of max profit. So you guys probably noticed that as well. I got filled at 30 cents credit, and I bought back to close at 15 cents credit, which is what we do every day. And we've had a pretty good year so far. I can't complain, and we will continue to do it. So if you want, shameless plug here, if you want to learn how we do this, learn what levels we're looking at, start for yourself, more than happy to have you. I'll leave a link to the Discord below in the description, and you guys feel free to join and learn a little bit more from the community. Anyways, appreciate everyone's time and have a good day. We'll see you next time.